All right. Hello, everyone. Welcome to the Synergy Traders event. This is Valerie Fox. I'm the, well, let's see, I've been trading for a while now, trading for over 13 years. I'll get to that in a little bit, but this presentation is all about focusing on my top 3 favorite indicators is what I've decided to focus on. So we'll get into those here in a minute, but thank you all for joining live. If you're here, if you're watching the recording, obviously, thanks for watching the recording. Let's just hop right in. I'm going to start with a quick disclaimer. This content's for educational purposes only and is not financial advice. Trading involves risks and may not be suitable for everyone. Past performance does not guarantee future results. Always do your own research, consult a licensed financial advisor if necessary, and you are responsible for your own trading decisions and results. So now that that is out of the way, let's get to the agenda. So first, I have a little gift for you. I'll get to that in a moment. Then I'm going to give you just a brief little bits of my background. So in case you've never heard of me before or we've never crossed paths, you can at least kind of hear a little bit about how I got to where I am today. Then I'm going to go over my first, second, and third favorite indicators. We're going to go over a lot of screenshots. I'm going to show you different ways to use them. My hope is that you walk out of this presentation with at least one new kind of aha moment that you can go take to your charts right after you're done. So I'm a big advocate of keeping things simple, and hopefully you'll feel that as you finish this presentation. Then I have a little something for you at the end as well, for those of you that stick around. And at the end, I'm also going to open it up to live Q&A. So if you are watching and you find yourself kind of having some questions, just jot it down. And then at the end, I'll be sure to save some time so that we can do some live Q&A. Or if you want me to, look at some live charts or analyze anything in real time, I'd be happy to do that as well. Okay, so let's dive in. First, my little gift for you is that I have something called the Ultimate Checklist for Profitable Trading. And, the purpose and the reason why I created this is it helps you really unlock your full potential as a trader. And what I mean by that is there's a couple different stages of trading, as I like to call it. And sometimes people skip over things as they grow into their trading. So what this is it's a checklist you can go through. It's like 8 or 9 pages long, but it helps you identify and overcome your blind spots. So a lot of times as you start trading and you build more, more experience, you go a little faster, you do things a little differently. But oftentimes what I've found in my time working with traders and even, reflecting on my own journey is there are things that I missed that had I not skipped over this component or that component of my trading, I would have made more money trading ultimately. So what this checklist does, you can go through it, you can see where you're at, exactly which stage of trading you're at based on things you do today. And then you can also identify maybe some things that you've skipped over, and also what you should be focusing on next to continue to progress your trading. So it's a free checklist and it's available at tradefocus.com/checklist. So feel free to take a screenshot of this or come back and revisit it, but it's a free checklist. I highly encourage you to take a look at it. I imagine there's at least 1 or 2 nuggets you'll take from it. So that's my gift to you for watching this presentation. So thank you again for being here. And I'll share the link again at the end as well. But just a little background on me. So I've been trading Forex for over 13 years. It feels like a long time, and just yesterday at the same time. The interesting thing about my story, and maybe some of you can relate to this, is it took me over 3 years to become profitable. So I started trading. I kind of was a dabbler at first. I was like taking in so much information and just trying to just throw darts at the wall and make anything stick. Can any of you relate to that, where it's maybe taken you, whether it was historically or in present day, a little bit longer than you thought it would to become profitable? Give me a yes or no in the chat box if you can relate to this. I like to keep it engaging and engage you all in the chat, since it's kind of a one-way conversation. So thank you in advance for those of you that participate with me. So Ryan says yes, Ralph says yes. So yeah, I mean, I think a lot of people dive into trading and they're like, yeah, I can do this. I see other people do it. Desert Pilot said yes. And then you're like, oh, there's kind of a little bit more to this than I expected, or I'm hitting some roadblocks that I didn't expect, or wow, this is a little bit more complicated than I realized. So something that I think a lot of traders develop without realizing it is this like dedication and determination, right? Ryan says 3 years also, quit trading for 7 years after. Yeah, same for me, Ryan. I hit a point somewhere in the third year where I was like, whew, I've been trading for 3 years. I've lost tens of thousands of dollars. I need to step away for a minute and clear my head and decide if this is something that even makes sense for me to continue pursuing, because I obviously haven't been making money. I've been losing money. So I stepped away and I really, like, I just left it for a little bit. And then I came back to it and I was like, you know what? I really want to make this work. I really want to figure this out. I know I'm capable. I know I'm smart enough to do this. Like, what have I been doing wrong? And I just really, at that point, there was this shift where I was like, I need to take responsibility for my trading. I need to realize that what I've been doing to this point isn't working. So I need to do things differently. And so there's a lot to that journey, right? And that transformation, and I'll talk a little bit about it later, but I think that's something that a lot of people can relate to, that, profitable trading doesn't come as quickly as you want it to. But, one of the reasons that I'm here is because I did make it to the other side, right? I ended up being able to retire myself from corporate America, and my husband too. And, in the past 5 years, I've coached thousands of traders, helping them figure out how to make money trading, get the consistency they want, build their confidence, and ultimately grow and scale their money. So it's a really cool thing once you kind of hone in on certain components of trading, and it's totally possible. And then, 3 years ago, I moved my family from US to Portugal. And since then, we've been living in Portugal. That was one of my big drivers, is I want to be able to retire from my job with trading. And I also wanted to be able to live and trade anywhere in the world, which obviously trading gives you that flexibility as long as you have internet. So I lived in Madeira, the island of Madeira, for 2.5 years. And then just at the beginning of this year, I moved to the Azores in Portugal. So trading has really afforded me like a really cool lifestyle for myself and my husband and my 2 kids. And that's just, a little bit of my background for those of you who don't know me. So let's dive into the agenda. We're talking about indicators, and I'm going to share 3 of my favorite indicators. But I'm going to just like pause for a minute and kind of, let's just talk about why we use indicators, because there's literally hundreds, thousands of indicators out there to use. And let's just kind of peel back the onion layer for a moment and think about why we even use indicators. So indicators give you an edge. It's taking some kind of data or piece of information and using it in a way that gives you an edge or a higher probability outcome of what you're seeking than if you were to just blindly go and buy or sell. Just blindly trading is just gambling, right? Yeah, you got a 50-50 chance. It's going to go one direction or the other, right? But when you use an indicator or a piece of information or data, what you're hoping to do is gain an edge. Maybe not, it's not a prediction, it's not a guarantee, but it's an edge. So that's what we're trying to use here. And you can also use multiple pieces of information to get a confluence of factors, which normally makes your edge even stronger. So you can use indicators to determine your trading bias. So what I mean by that is to determine, should you be buying or selling in this moment? You can decipher that kind of information from the use of indicators. You can also use indicators to pinpoint your entry, right? A lot of people, when I talk with traders, they're like, oh yeah, I know how to find a trade, but I don't know where to enter and I don't know where to exit. That's often a big problem for traders when they're kind of earlier on in their journey. So you can use indicators to help really pinpoint to the exact point where you should enter. You can also use it to identify your stop and to fine tune your profit targets, okay? So I'll be kind of talking about all of these ways of using indicators as I go into each of my 3 favorite. But before I go into my 3 favorite, for those of you that are on the line, use the chat box and tell me what are some of your favorite indicators. We'll see if we have any overlapping. Again, there's hundreds and thousands. And honestly, my philosophy on trading, based on experience, obviously, is that there's no right or wrong trading style. There are literally endless ways to make money trading. So, you see all these people online saying like, oh, using this is better than this, or this is better than this. And at the end of the day, it doesn't really matter as long as you find something that can make you money. So Desert Pilot said his favorite is pivot points, his or her favorite. Pivot points. Anyone else have any favorite indicators? We've got moving averages, MACD, RSI, stochastic. Thanks, Ryan. Love it. Anyone else want to share? Got a quiet crowd this morning. You still must be waking up. Volume, love it. COT data for fundamental analysis. Yeah, I mean, then there's the whole point of, technical versus fundamental. So I'm going to be focusing mainly on technical analysis. But when you open the bag for fundamental analysis and more longer term trading, there's, company stats and earnings releases and all these other kind of bigger picture data points, the interest rates and other things that can really impact certain instruments. Richard says my favorite indicators are no indicators, price and volume only. Love it. So yeah, a lot of people call that price action, using different things that you can see on naked charts. So cool. Ryan says, I use anything that helps me optimize my quant trading script. Yeah. So, algorithmic trading and automated AI trading is becoming a lot more popular these days, and more accessible even to like kind of the common trader if you're familiar with using some of the AI tools. Love it. Okay, so we have a wide range of people on the live call. Tim says structure, levels, volume, trend lines. That's it. Love it. Okay, so let's dive into a couple of the things that I enjoy using. I've, over the 13 years, I like to try different things. I love change. I love finding kind of new ways of trading. In my corporate background, I'm like a process improvement and optimization. I have a lot of specialty in that. So, when I became a trader, it was kind of out of like personal interest and like infatuation a little bit about like, ooh, how can I take a strategy? How can I build a strategy? How can I, optimize it and all that? But I'm also a huge lover of simplicity. And I think you'll see that in some of the things that I show you and how easy, because a lot of people make trading so complicated. And I'm a big advocate of keeping it simple. And I'm also a big advocate of using rules-based trading. So you'll see some of that come out as we continue to dive in. So the first indicator that I love using, and these are not in chronological order or even necessarily like most favorite to least, most favorite to most least favorite. I don't know how you would say it. But anyways, they're in no particular order, okay? So price action is one of my favorite ways to trade. This is not where I started though. So for me, when I first started trading, price action was scary. I didn't understand it. All these candlesticks on the chart, I didn't really know what I was looking at. But my hope with sharing price action trading with you today is to maybe simplify it. And price action is really like a vague way of saying you're just using historical price on a chart. But there's different little components you can hone in on, and that's what we're going to dive into with this first one. So how do you trade using price action? I'm gonna kind of give you a short list here, and then I'll also show you some screenshots for each of them with what I mean exactly. So for the price action, you can use it to find trend identification, like are we in an uptrend? Are we in a downtrend? Are we in a sideways market? I'll show you what that looks like. You can also draw trend lines on a chart and use it to find entry and exits. When you're in an uptrend, where can you buy and sell to get in on the move? And, when you're in a downtrend, where can you sell and buy to get in moves as well? You can also use it to find support and resistance zones, patterns, and reversal candlesticks. So these are the ways I've used it in the past. There's probably a lot of other ways you can use price action, but I wanted to give you some specifics here. So let's dive into each of these now. So for trend identification, I'm going to use the same chart for all of my examples today in this first section, just to show you how like the same chart, you can look at it differently. You can put chart overlays or other indicators on it, and it can share information, but a lot of times it shares the same information. So when you think about picking indicators and finding your favorite indicators, there's an art to it. It's about finding what you see easily and a very kind of like crystal clear way for you to identify your trading bias. Are you buying or selling? Identify where you're going to enter. Identify where you want to exit if the trade goes against you, like you've lost your edge and you want to exit, and also to identify where you want to exit and profit. So this is just a blank chart. So if I were looking right here at this section, I think you can see my mouse circling. Would you say this is in an uptrend, a downtrend, or a sideways market? Use the chat box and tell me now. Right here, where I'm circling. Is this an uptrend, downtrend, or sideways market? Up, 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 up. Yes, super obvious to everyone. So if you came into this presentation thinking that you could not read the charts using pure price action or naked charts, they call it sometimes, then you have proved yourself wrong, because correct, this is an uptrend. And now what is this right here? Is this an uptrend, downtrend, or sideways market? Down, 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 D, down, exactly. So it's really easy when the charts aren't messy, to a lot of times when you go to the higher time frame charts, things are a little bit more crystal clear. When you zoom out on charts like I've done here, things become more crystal clear in terms of trend identification. When you get over here, this is where price is today. This is a screenshot, by the way, of the pound US dollar on the weekly chart. It was just I picked a random one and took a screenshot and used it for all of these. So in case you were wondering, this is the weekly chart on the pound US dollar. But this could be representative of a stock chart, an index chart, a commodities chart, anything, right? They all use candlesticks documenting price action. It could be a 5-minute chart, a 1-hour chart. So I didn't put the information on there because I wanted you to use your imagination and apply this to whatever market that you trade. So over here on the right is kind of like a sideways chart. You're not going higher, you're not going lower, you're just kind of flatlining or going across. So in terms of price action, to identify an uptrend means the peaks and valleys are going higher, or the highs and the lows are going higher. That's how you know you're in an uptrend. A downtrend means the peaks and valleys are going lower. So your highs are going lower, your lows are going lower, you're in a downtrend. So that's kind of the definition. Yeah, Ryan said, recognized it, been sideways the past few weeks. Yep, totally, love that. Okay, so trend identification is pretty easy. Let's kind of layer on another component here. There we go. Okay, so let's talk about trend lines. So this is the same chart. And now, instead of just, identifying the trend or the direction, we know that this is in a downtrend. So if you wanted to say, okay, we're in a downtrend, I want to trade with the trend, which oftentimes people do. There are certainly ways to trade against the trend, and I'll even show you that with the trend lines here. But let's look at the first trend lines. So we were in an uptrend back here. It rotated down, started making lower lows and lower highs. By definition, putting it in a downtrend. So I drew a trend line at these two lows, kind of with an extended line. And then also, I think it was on these, I don't know, one of these two, there's 2 points there that basically made this line. So if you are at your charts here on this candle and you're like, okay, price is going down, and it comes up here and it continues to make a lower low, this would be a good area to sell in alignment with the trend, or even this area up here. If you missed this one, this would be a good place to sell. And wow, what a down move that would have been. So that's an example of a trend line. As price continued to go down and kind of make a steeper downturn, maybe you missed this entry up here and you came to the charts a little later. Here's the lows, you're connecting with the line. Here's the highs, you're connecting with the line. So again, this kind of would have been a good place to buy for the bump up, or this would have been a good place to sell to continue riding down. So when you use trend lines, they can help identify areas where you might buy or sell to kind of go in alignment with the trend. Now, as you can see, trend lines aren't perfect. Price isn't perfect. And all of these indicators we're covering are an edge, right? They're not perfect. They're not a prediction. It's an edge. So they don't always hold, right? So this one, it wasn't perfect. It went above it a ways before it reversed. This one didn't hold. It went way past it. So a lot of times with trend trading and using trend lines, it can be best, you have a higher probability to trade in the direction of the trend. Now, there are people that do counter trend trading to get these little runs here in between. And that's something you could do too, but you might want to be a little bit more conservative with your profit targets. So that's an example. You can also use this same chart, this naked chart, to identify support and resistance zones. So support and resistance are basically where price changes direction. Price was going down here and it changed direction, and it went up and then it went down, and right here is a support zone where it changed direction and it bounced. So here's an example, right? So price was moving up and bounced here. And what you'll find with support and resistance is resistance will become support and support will become resistance. So when you're trading, you can look left and find higher, find areas where price has been respected in the past, is what I call it. So if price reversed here and then broke through it, it's very common when you study support and resistance that it will eventually come back down and retest it again, which it did here before going further up. The same is true, it breached it here, but then sure enough, it came back for a retest before it pushed down further. And you can see it here as well. It came up for a test and had a reaction because this is a strong support and resistance level historically. And it bounced back for a minute, but then it broke through it and it came back and retested again. So what you could do with support and resistance lines is trade, breakthroughs or bounces. So if, you had this level here, which was strong historically, and it tested it and then bounced and passed, once it closes on the other side of it, you could you could trade the retest, which happened here. And you see it time and time again. Here it bounced, it pulled back, it bounced again, and eventually it broke through it. And then on the next week, it came back up for a retest before pushing down. So if you take the time to just study these levels, and we'll do a couple more. So here's another one right here. You saw it over here on the far left. It pushed price all the way down. It comes up here, comes down for a retest before going further. And then when it comes back down, it tests it again and breaks through, eventually comes back up for a retest before going further. So let's do another one, and you can just study these. Like if you're curious about support and resistance, go to your charts and study it. So here's another one. Price went above, came down and bounced here. What's really important with support and resistance levels is the reaction from it. So a lot of people like to focus on, oh, it came down so strongly and then bounced. I actually like to focus on the reaction from that level. So even though this is just like a little baby bounce right here where price went up and then came down just a little bit, what I like about this level is, wow, price then moved all the way up here. This is on a weekly chart again, so that's a pretty big move. And, also right here, like when it came back down, went up to test it, and then, whoa, look at how far it pushed down. So this is like a really meaningful support and resistance level that I'd leave on my charts, as price works its way back up here. And then, if we were looking at the current price, and if I were trading this in real time, and I'd say, hey, what levels do I want to be watching right now? As you look left, you see this level here where price went up and then, wow, really shot down with two huge candles. It was respected here. It was respected here. It was tested and respected here where it bounced, went through, bounced, pushed down. It's pretty close here, between this level that I have and then also this one a little bit above it. I'd be really watching for some candle action or like when price breaks through it and comes back down for a bounce before going up. So those are some ways you can use support and resistance. Catherine said, hindsight is easier to see where to have bought. Absolutely. This is all hindsight, of course. We can pull up the charts at the end and look at some things in real time. I'll try to show you the hindsight so you can see kind of the makings. And then, we can look at things in real time like I just did there. Tim says, here's the one trouble with drawing them on the chart now. It's after the fact and plays tricks on the mind. Doing it on the hard right edge is different. I find looking for the big actual live time orders take place and put that live activity in the context of levels. Yes. So a lot of times what you can do is take these support and resistance levels and then layer them with something else, right? So whether that's a pattern or a candlestick or things like that. So I'll show you those here in a second. Hindsight is always 20/20 for sure. I'm not denying that, but that's part of the way you kind of learn to recognize things. So let's talk about patterns. So there are continuation patterns with price action, and there are reversal patterns with price action. So we'll talk about both of those. First, let's talk about, I'm going to do some writing on the screen here. It's really difficult to write with this little pencil. I look like a kindergartner a little bit. So let's talk about highs and lows. So for a continuation pattern, when you have a higher high and a higher low, HHHL, this is what I'm talking about. Higher highs there and higher lows. So we're in the uptrend, like we talked about, but how would you trade that? So let me show you how you can trade just using these swings on the charts. Let me clear those out. So for higher highs, higher lows, you have these swings from the wicks to the wicks, right? So if we were in this situation right here, where price had recently made a higher high, you've got high, 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 your highs are going higher, your lows are going higher. We don't know any of this that's happened yet, okay? We're just right here in real time. If I thought price was going to make another higher low, where would it make it? And let me just clear this off again. So we're right here in time. And I'm saying, I think price is going to pull back somewhere. Where would it pull back? The most obvious pullback point would be the prior high across, and boom. It's not an exact science. These are zones. So sometimes you need to give a little buffer, but price ended up going a little bit higher first, and then sure enough, it pulled back there. So price continued to make higher highs and higher lows, right? So once price breached this high, I would be looking for the same thing again. Let me clear these off because it kind of blurs everything. So we're here. Price has just breached this high. We're a little bit higher. I would be looking left saying, where would price be coming? And there's this high here where price stalled for a minute. It also aligns with this big reaction here. And I would say this would be a level. Now, whether or not you put enough buffer to get that, you know, you're not going to get every pullback, but that would have been a very natural one. Or you could have done this one for a deeper pullback. You could have had an order waiting here and waiting here. Again, price goes higher. Let me clear it. So it's kind of just a matter of like studying these waves. So you know you're in an uptrend, you know price in this case is making higher highs and higher lows. So you know, once price exceeded this high right here, went higher, you'd say, where would it be pulling back? Here's the neckline. So for these levels, I like to use necklines. My pencil's not drawing it exact because I'm not in the app right now. But this was a very natural place for price to pull back for a buy to go longer. So those are all in the uptrend. Let's look at some of these in the downtrend real fast. Is this helpful, by the way, to kind of see how different ways of using price action? So here, awesome. Thanks, Ryan. So price was going up, going up, going up. We have a higher high here than this. The lows are going higher, but then what happens? Price comes down and breaches this low. So now you have a lower low. That's showing you a rotation in price. And it doesn't get confirmed as a downtrend until you also have a lower high. So now your highs are going lower, your lows are going lower. At this point, when price starts to bounce off of this, so right about here, when price gives you kind of a reaction and starts going lower, you know you're now on a downtrend from this point forward. So you're in a downtrend. So then when price gives you a new lower low, which happens right here, you would say, okay, where might price pull back? This would be a natural place, and so would this. This isn't very far away though, so you'd maybe want to go for that one. So then price goes down and gives you another lower low here. What's a natural place that price might pull back? Boom, all the way across there. My lines again are really crooked. I apologize. It would have been more like here that you probably would have entered. But you get, it goes a little bit further back. Your stop would be like above this right here. Let me clear this off. It's getting quite messy because I want to show you some stop and like some natural stops and profits. So again, you're getting lower lows. Each time you get a new lower low, you can expect a pullback, right? The new lower low happened here, but it wasn't for, you know, it kept going down. So you have to wait till it starts to pull back. And then you look left, where's a natural pullback? Right there and right here. So you decide, is this an okay place for you to enter, or do you want to wait and enter up here? Again, depending upon what kind of buffer, you may or may not have gotten the sell order right there, but a natural stop loss is above this highest wick of the previous high. So give a little buffer, put a stop loss there, because a lot of times it will go back and retest this higher one. So here price goes down again, makes another lower low. Where's a natural one? There, or even here. If you would have done this, you would have gotten your fill. If you would have done this, you would not have gotten the fill. So you can just do that down and down. So let's look at where price is today and what I'd be looking at. So price is, right now, it's kind of in a little bit of a range, right? If we look at this entire section here, but if we just hone in on like the last, I don't know, however many weeks that is, like 3 months, we did get a higher high. And then we have these like internal higher highs, and your lows are going higher too. So I would say in kind of like, the shorter term here on the weekly chart, we're in an uptrend again. So what would I be looking for? Let me clear this. So price gave us a higher high. I'm expecting a pullback. The question is it going to pull back to here? These highs right here, pull back here, or is it going to pull back to this guy right here? That's also quite recent. So it's almost there. You could have an order here. Make sure you use like an appropriate stop loss. Really the stop loss is going to be below this with a little bit of buffer, in my opinion. Or even, for this one, you might use this level as kind of like a stop loss. If you get stopped out, you could make sure that this level holds before entering, but it could bounce here or it could bounce here. Or, nothing's guaranteed. It could start going down again. So that's why it's always really important to have a stop loss. But you can use these information to find good entry points that have an edge. That's the whole point of trading. Find an edge. Don't just go in with your eyes blind. Know what's happening in the market. Know areas of expectancy, but know that they're not guaranteed, right? So use a stop loss, have a profit strategy. From a profit strategy, you could always do like a 1-to-1, 2-to-1, 3-to-1, or you could use price action, right? If price enters here or here, you might want to be taking off some profit or reducing risk when it comes to retest this zone again. So anytime it approaches some recent support and resistance zones that haven't been touched in a while, you can expect a bounce off of that. So that's a good time to either tighten your stop loss, lock in profits, or even close part of your position. Okay, so for continuation patterns, we have higher highs, higher lows, or lower lows, lower highs. So again, higher highs, I thought I had my pencil still, pardon me. Higher highs, higher lows are just kind of like the zigzag. You could even change to a line chart and you'd see this even better. And then the lows go down and up and down and up and down and up and down and up. So that's trend continuation. There's also reversal patterns. How many of you have heard of, yeah, Ryan was saying in the chat that since we're on the weekly chart, the price could go down as company announcements in the market and kind of red flag news, things like that. Economic announcements come out and impact these currencies for sure. Okay, so those are continuation patterns. I want to quickly touch on a reversal pattern. Have you guys heard of the head and shoulders? Anybody heard of the head and shoulders pattern? It's a very common pattern that's traded. And there's different ways to trade it. You can trade it with like MACD divergence and a couple other things. It's also very easy to spot on the naked charts. So when you're in a trend, right, we're in an uptrend, you have your high that goes higher, you have your low, and then it gets breached, right? This is where you see the head and shoulders. So here's the left shoulder, the neckline, the head, and then when you get this lower neckline here, that's a qualified head and shoulders in the way I define it. So then the natural entry here is at the left shoulder if you're just purely doing price action trading. A lot of times people add a little buffer. So again, you may or may not have gotten filled on this depending upon your buffer. You can also use like Fibonacci tools and things like that to get like a 61% retracement or I forget, 70 579. Anyways, the retracement levels are good to use for pullbacks as well. So that's a head and shoulders. Here's an inverted head and shoulders. So where you have the left shoulder, the neckline, here's the head down here, and then you get a higher. So you're going lower, and then all of a sudden you have a lower low, but now you have a higher high instead of a lower high like you had been getting. So right here, when price went higher, this would have been a qualified head and shoulders. If you did the neckline, you know, the shoulder there, you had the pullback there, or you also had another pullback here to that level as well. That would have been a good place to buy. Where you were in a downtrend, price is changing directions as notated by the higher high when you had been getting lower highs. And then you would enter on, enter at the left shoulder there. So that is a reversal pattern called the head and shoulders. Okay, let's see what I have next here. Reversal candle sequences. These are really fun. They're easy to spot. I have 5 different ones that I use. I'm gonna have to speed up though, because I'm still only on my first indicator, which I could have done a whole presentation on price action, but I wanted to include a couple other things. So I'll be fast here. I'll just show you I'll show them all to you because I don't want to shortchange you. So the first one is called reversal candlesticks are basically, each candlestick is composed of an open, high, low, and close price. So the body is the open and the close, right? So for red candles, it opens at the top of the body. At some point, it goes higher. At some point, it goes lower, but it closes at the lower part of the body. So this candle opened here, some point went higher, some point went lower, and then closed here. On the green candles, it opens at the bottom of the body at some point in the time frame of the candle. Again, this particular one is a weekly candle. So at some point in the week, it went lower. At some point in the week, it went higher, but then it closed at the top of the body. So there's a lot of information you can derive out of market sentiment in these candles by the shapes that they form. So there are a lot of traders out there that like to trade using candlestick formations, or I call them reversal candlesticks because I particularly like to trade them when they're showing indecision. So have any of you ever traded using candlesticks? Give me a yes or a no in the chat. Let's see. Do we have any candlestick traders? Ring says yes. Ryan says yes. Cool. So some of this may not be new to you, but maybe the way that I use candlesticks may be a little different. So there's certainly could be something to learn. Tim says, I don't use them other than for viewing. Cool. So yeah, there's information you can get from them. So there's 5 reversal candlesticks that I like to trade. Some of them are stronger and more frequent than others, but I'll just quickly show all of them to you. So the first one is the pin bar, PB. So a pin bar basically is there's a direction it needs to be to show a downtrend or an uptrend, but basically the pin bar means, let's talk about what happened here on this candle. So price was moving up, it was in an uptrend. Then this candle forms. It opened here at the top. At some point, price went up, went down, and it closed down. So what happened was there were some buyers that were pushing price up at one point, but then the sellers came in and said, no, we're going to push price down. And they won, which is why it has this really long wick at the top and a shorter body at the bottom and a very short wick at the bottom as well. So what this does, imagine this being like an arrow. So when this candle shows up after an uptrend with the big wick here and the smaller body down here at the bottom, that's saying potential move down. It's not telling you how big of a move down it will be, right? But it's saying there's some indecision in the market. When we were on this strong uptrend, all of a sudden there's some indecision. So it's an opportunity to sell, right? So here's another pin bar right here. So again, price was going up. These can be any color. It's more about the shape. So you want a long tail on the top and a shorter body on the bottom, and that indicates downward pressure. Where price was going up, 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 it was all the way up here at one point in the candle, but then the sellers pushed price down, 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 and it couldn't survive at the top here. it got pushed down. So that's showing you there's more selling pressure than buying pressure, and that, you know, you have a potential move for down. And this move went really big. Again, you never know how far it's going to go. That's all hindsight. But it's showing you there's some indecision that could be changing the direction of the recent movement. So let's just quickly, pin bars are one of the most traded candles. So we had it here. I just want to show you all of them that are on the chart because they're really everywhere. So those are some upper ones. Here's a one that's pointing for an up change direction, right? So you have the long tail down here. So price was going down, down, down. The sellers were in control. And then before the candle ended, the buyers pushed it back up and the buyers won it by changing the direction, showing that there was going to be a little bit of a reversal there. Here's another pin bar right here showing upward pressure after the down move. So price was moving down, down, down. It wanted to go back down, but then the buyers kind of took over and showed some upward pressure. Here's another one here that didn't pan out, right? Kind of has a long upper wick, but it didn't really go anywhere. If you look, they're everywhere. Here's another one here showing some downward pressure. Here's one here showing upward pressure. So what I've found with candlesticks is it really helps to trade them with a confluence of factors, right? So either trading them in the same direction as the trend, trading them at support and resistance levels. You know, we had this support and resistance level here. It came down and tested it, and then price went back up. That's a good sign. Here's another one here. So if you look for pin bars, they're honestly everywhere, but it's a matter of using them with something else to really make sure you have an edge. That's the first one. The second one is the spinning top. So a spinning top is basically where you have this small little body in the middle and you have like a larger wick on top and a larger wick on bottom than the body. Yeah, it can also be called a doji. Yep, exactly. Thanks, Ryan. You kind of get into like your own language and then you forget there are other ways of calling it too. So the spinning top is another similar one. It's showing a lot of indecision. Like here's a spinning top right here. It's showing indecision where price was going up pretty strongly and then the buyers and the sellers are kind of battling it out. So you don't know which way it's going to go after that, but it's showing you that some of the strength here is weakening. So again, when you take a spinning top at a level of support and resistance, you know, with something else in alignment with the trend, you know, here's one here. So basically we're in a downtrend, price was moving up. You have, this is maybe more of a pin bar than a spinning top, but you have this like little body and two wicks, you know, that's a good sign that price might be pushing downward. Let's see, where are some more spinning tops? They're not quite as frequent as the pin bar, but you can find them. Again, the top and the bottom need to be kind of close to equidistant. And then the body, the wicks need to be bigger than the body. Here's another one right here. Okay. So yeah, that's a really good one. Those are the single candlesticks. Gosh, I'm running so tight on time. There's so much more I want to tell with you. The other ones, I'll just tell you, you can look them up, are the engulfing bodies. So when price is moving one direction, you have a second body that completely engulfs the other one. That's another good one to use. Here are some engulfing bodies. I'll just circle for you. Price was moving up and then boom, we got a big candle where the body of the second candle completely engulfs the body of the first candle. Here's another one right here. It's called the engulfing body. The fourth one is called the inside candle. Let me delete these lines and get clean, and I'll circle a couple of those. The inside candle. So this is taking the entire candle. That's a 2-candle one. So like right here, you can see the first candle here and the second candle. The second candle with the wicks is entirely inside the first candle. So I know this is really small. Hopefully you can see it. That's called an inside candle. Also a sign of indecision, right? So it doesn't matter if either of these candles are red or green, but what it's showing is price was moving. It was making movements and then it slowed down. So it's a sign of indecision. And then the last one is called the 3-bar reversal. And this is a good example here. You have a move down, you have kind of an indecision candle or a slowdown, and then a third candle that really closes much higher. So that's called a 3-bar reversal. Where's another 3-bar reversal? I know that here's another one right here. Price was going up, then you had a little indecision, and then the third candle was like, no, we're going to close further down. That's showing this the sellers are kind of taking over, and that price is more likely than not to move down further. How much further, we don't know, right? Here's another 3-bar reversal right here. Price went up, little indecision, and then boom, price closed further. Again, that move wasn't super strong after that, but you don't know that in a moment. Here's another one right here. Price was going up, and then it went down again, and then this big candle. This is also an engulfing body. It's probably what I would call it, more than a 3-bar reversal. But hopefully those visuals were helpful. Again, when you layer something on top of it, like support and resistance lines, they become a lot stronger, right? So we have these support and resistance lines that I showed you earlier. And when you get like, a spinning top or a doji, add a level of prior like support or resistance. When you look left, that's a good sign for a reaction. Again, here we have a pin bar, add a level of prior support and resistance. That's a good sign to go further south. The inside candle here, at a level of support and resistance when you look left, that's a good time to trade using the candle. So hopefully that was helpful. Quickly go over indicator number 2, which is the Williams fractals. So these are really good when people are still struggling with price action. And I'm just going to quickly show you what they are. So here is a naked chart, as we just saw, and here are the Williams fractals. So what these show you are just swing highs and swing lows. So sometimes when people are newer to trading price action or to finding swing highs and swing lows, it can be difficult to kind of see the trees through the forest, right? So you can add the Williams fractal. It has a default setting of 2. And what that means is this upper wick here is higher than the upper wick 2 candles to the left and the upper wick of the 2 candles to the right. So it's basically showing you that it's a high. The same is true for the red arrow. This is showing you that it's a swing low, where this low is lower than the 2 to the left and lower than the 2 wicks to the right. So this is an easy way for you to just kind of see through the mess sometimes that happens on charts. Are the lows going higher or the lows going lower? They're going higher. Are the highs going higher? Just look at the little arrows. Also, you can use these as like support and stop loss levels, right? So when you got the head and shoulders here at the top, you went higher, and then all of a sudden here with this arrow, you went lower than the previous one over here. Okay, so what does that mean? That means, you might want to sell at this left shoulder. If you're going to sell here to go down, where would be a good stop loss? It'd be at the prior high. Add a little buffer, and that's where I would put it. And the same is true for anywhere. So you're going down, you go up, you go down, and then you pull back here to sell to go lower. Where's a good stop loss? Look left, go up to the next one. Here's the prior high, add a little buffer. That's a good stop loss. So that's how you can use Williams fractals, not only to find a trend, find swing highs and lows, see when direction or when you have a continuation or when you have a reversal, and then you can use it for stop losses as well. And in terms of profit targets, if you entered here for a sell, your stop loss is up here. As price starts moving down, when it gets to that recent low where price was going lower and lower before it bounced up, this would be a good time to either move your stop to break even, or maybe close half of your position to lock in some profit. So as you continue to get lower lows, you could tighten your stop loss, you could lock in profit. So there's lots of ways you can use the Williams fractal. And then my third one is just a moving average crossover. This is super simple, but there's so much that can be gleaned. So for traders who are like, I want something simple, I want to just know, I want a crystal clear sign when I have a trade set up. I think moving average crossovers are the easiest thing. How you trade it is you put 2 moving averages of different lengths. And when the smaller moving average crosses the larger, you simply trade the direction of the cross. Again, I'll show you some visuals. And I gave you some examples here. You can come back and revisit this. But for position trading, where your trades last weekly to monthly, you can use the daily chart. You can try like this, a 6 moving average and a 15 moving average. These are just some things that I like to just, with moving averages and moving average crossovers, pull up what you like to trade and put them on there. And then just toggle the settings until trades become really obvious, because all instruments move a little differently. But I just did this to kind of show you, if you're swing trading, meaning you hold trades daily from days to weeks, you might want to use the 4-hour chart. If you're day trading, where you hold trades from hours to maybe up to a day, you could use the 1 hour or the 15-minute. If you're scalping, where you hold trades for minutes to hours, you could use the 5-minute or the 1 minute. And these are all some settings that you could test out as like a starting point. And let me show you what they look like. So this is the same weekly chart on the pound US dollar that I showed you before. And this is just adding a 6 and a 15 moving average. So anytime they cross, so the shorter one is in blue, the 6. So when the teal crosses the gray, like right here, it crossed above the gray, and that means buy. So right here would be a buy signal to go up. Excuse me. So that would be a buy signal. It crossed below it, kind of gave you a little false low. You might want to, if you hadn't already kind of exited your position, that would be a good exit point. Or you could also exit it up here when it crosses the shorter moving average. But again, it crosses above it here. You could go long. Here it crosses below, so that could be a good time to sell. It crosses it again here to sell. You could use these to trade in alignment with the trend, to increase your level of confluence. Here's another crossover right here to go long. You might want to close out your trade there and lock in your profit. It looks like it's going lower, but at this point when the crossover happens, you're still in an uptrend, so you maybe would not trade this one right here. Wait till it gets back in alignment. Here it starts to go back up. When it gives you that higher high like we talked about, then you might be willing to get in there and ride it up. So that's how you could use some moving averages. Here's showing you back on a daily chart, so going down a couple time frames for position trading, where you hold trades weeks to months. Here's an example where the crossover happened. This is a move that took 34 days, right? From here to here, if you closed when it crossed back over, it's 34 days, but you made 401 pips, right? Here's a more recent one. The crossover was here. If you would have entered on this candle and closed up here when it crossed over the shorter moving average, it was 14 days and it was 215 pips. So just to kind of show you what's possible on the daily chart, if you're someone who likes to hold trades for weeks or months. This is a swing trading on the 4-hour chart. So again, I'm adjusting these moving average settings based on the suggested ones I gave you a couple slides ago. You can come back and revisit this, of course. But if you like to hold trades days to weeks, this might be something you could do where, when the crossover happens, you sell, figure out your exit points, whether it's, the cross here might be when you exit, or over here when it goes across again. I'm going fast now because I'm almost out of time. This is the daily chart. So this just shows you it's applicable to any time frame. And you can toggle the settings. There's no like, which moving average setting is the best for all charts. I don't think that's how it goes. I think you really need to hone in on what you trade, toggle the settings to really minimize the false entries and try to maximize your edge. And then scalping, of course, you could do it as well, where when the cross happens, those are your entry points. They're not all going to win, but if you have good trade management, risk mitigation, you should be able to, pull out more money than you lose. So a recap of my top 3: pure price action, the Williams fractals, and the moving average. Give me a second here. Tell me in the chat box, which one did you like best? 1, 2, or 3? 1, 2, or 3, which did you like best? So I'm going to take a quick drink. Tim says 1. Desert Pilot says 3. Yeah, again, there's no right way to trade. Catherine says 1, Ryan says 3. Okay, just proves my point. Everyone has their own trading personality, and that's what I find. Trading is not one size fits all at all. So real quick, I have just a quick special offer for those of you. Got something new that I launched. You know, like I told you earlier, 13 years ago, I was really overwhelmed by information and underwhelmed by my results. With like 3 years of losing, which was embarrassing a little bit at the time, but you know, it got me to where I am today. My big breakthrough when I became profitable, aside from using a rules-based strategy, I kind of really realized that trading isn't about finding that holy grail. It's about understanding a range of approaches like I've showed you today, and understanding how to adapt them to your own circumstances, your preferences, your trading personality, the time frame, the market that you like to trade, and even market conditions. So learning multiple strategies really helps you refine your skills. So I was able to take that information in my breakthrough and turn years of losses into over a decade of profitable trading for myself. And now I've created a program called Trade Master Monthly, where I help you do the same. Trade Master Monthly, just I'm going quick because I'm tight on time. So basically every month I'm going to give you a market tested strategy. I break it down step by step. I show you how to adapt it to your trading preferences, your market of choice. No more guesswork or endless searching if you're feeling overwhelmed with all the information out there. You get to expand your strategy repertoire. You get to improve your consistency and gain deeper insights to various trading approaches. So if you're ready to elevate your trading, I invite you to join Trade Master Monthly. It's only $49 a month. You can cancel anytime. It includes a 30-day guarantee. My special offer for you today that is if you join by July 31st, the end of this month, you'll get 2 strategies within your first month. So you'll get the July strategy when you join, and then next week at the beginning of the month, the timing is right for you to get 2 strategies in your first month, because I'll be launching the August strategy next month. So these are specific strategies, rules-based. I give you all the details. Inside Trade Master Monthly, I give you a strategy deep dive video, a detailed trade plan that you can edit, an implementation guide, a back testing trade log where I show you all my market testing and all the trades that would have qualified. I show you how to really apply trading variations based on your trading preferences and your market of choice, and pitfall prevention for that specific strategy as well. And then there's some bonuses. So if you're interested in joining, I'd love to have you. Trade Master Monthly, give it a try, completely risk-free. TradeMaster or TradeFocus.com/TradeMaster. And if you join before the end of July, you'll get 2 strategies in your first month. So for $49, you'll get 2 strategies. Decide if you like it or not. But it's a really cool program. I'm getting a lot of great feedback. Thank you so much. Post your questions in the chat box. We have just a couple of minutes if there's anything else you'd like to know. We have that free checklist I talked about at the beginning. If you want to kind of identify your trading blind spots, TradeFocus.com/checklist. It's free. And then if you want to join Trade Master Monthly, there's a link for that. All right, now I'm going to the chat box for just the 1 or 2 minutes we have left. Tim asked, how did the journaling play in your ability to make the turn into winning? Yeah, so Tim, I'm a huge advocate of trade journaling. And actually, when you join Trade Master Monthly, that's one of my free bonuses, is a trade journal template. So I'm an advocate of, first, you have to have a rules-based strategy that you're tracking the results from. So a very specific, objective way of identifying trades, knowing when you'll enter and exit, both in profit and loss, and how you'll manage those active trades. From there, you can track your results, not only what the outcome of each trade was, but also, did you follow your rules? What did you do well? What could you do better? And what are any market observations? So that's kind of like the initial trade journal once you have a rules-based strategy. But then once you get to the optimization stage of your trading, so you have a strategy, you've worked on your operational excellence, and you're following the rules, you're getting good results, then I like to use my trade journal also to test other trade management protocols, is what I call them. But let's say you just do like a straight 1-to-1 with a trailing stop loss, right? Maybe you want to test a 1-to-1 without a trailing stop loss. Maybe you want to test a 2-to-1, 3-to-1. Maybe you want to test moving your stop loss to break even once you get halfway to your profit. Or maybe you want to test scaling out your profit. So that's how, like, at the next level, I use my trade journal to really maximize the profitability of my strategies. And one more question, and then I'll give it back to you, David. Do you use your strategies for prop and or personal account? So great question. I use my strategies with my own money to grow and grow and grow. I'm a big fan of using compounded daily growth based on